Hello everyone, and welcome to another Brother Crypt video. Today I wanted to discuss the markets. As we can see, it's all in a slash of red. Bitcoin has lost 15% based on its price from yesterday, and if we're looking at a lot of the other top cryptocurrencies, especially all of the top 50, it appears they're all in a sea of red. Some of them have gone down by up to 20 to 30%. Okay. Um, I think this is really understandable, really, for a few reasons, which I'll get into as we progress into this video. But basically, I think if we look at the Bitcoin price curve, if we look for the last 3 months, we can see that Bitcoin reached its all-time price high of $20,000, which was on December the 17th. And really since then it's really been in decline, which is understandable. I think when we got to the Bitcoin price of $20,000, I think this was too high too soon. My anticipation and my calculation was for Bitcoin to end at roughly $10,000 by the end of the year. However, Bitcoin price got to $10,000 on in November, and then into December it really climbed. So now what we're really seeing is a correction. I think what happened was a lot of people came into the market. Maybe it was Christmas time, people were buying gifts of Bitcoin for one another. It was valued at around 20k. People automatically assumed the price would go up, maybe hearing that, Bitcoin was going to be valued by 50k or 70k by the end of 2018. However, if people invested 20k, they want to see some form of growth. And now with Bitcoin coin prices, based at just under $7,000, it will be very hard for new people to hold those coins. And there's also a plethora of news articles that have come out today, which sort of make cryptocurrency, especially Bitcoin, look questionable to hold right now, especially for new hands. So let's go into the news. Now, Visa and MasterCard made buying crypto much more expensive. This is an article written by newsbtc.com. Let me just give you the summary. Using credit cards to buy cryptocurrency is over. Both MasterCard and Visa have decided in the past to change the way cryptocurrencies are purchased and processed. Most of us who use cryptocurrency exchanges pay with either a credit or debit card, which are charged a standard 4% credit card transaction fee. From now on, though, when doing business on Coinbase or whatever exchange you may be used to, be prepared to pay a 5% fee to your credit card merchant, as well as a 4% service fee to the exchange. So basically, we're looking at cryptocurrency as a form of disintermediation, as a form of disruption. It's something that's going to rival the banks. It's something that gives us individuals our financial sovereignty. Banks, in my opinion, they are getting clued up. They are really looking to see how they can keep their business model in check. So I think this is, an expected pushback by banks or credit card issuers. Basically, if you are using a credit card to purchase what can be deemed as cash or another currency, then they are going to sort of make it comparable to you buying foreign exchange. So, for example, when you go abroad, you leave your domicile, you go to a new country, you put money in the cash machine, you have to pay like a 3% fee for you to get cash in the new currency. What banks are doing is they're saying, we need a cut of all of this cryptocurrency market. So therefore, why don't we sort of list cryptocurrency as a form of a cash sort of as a form of a cash offering, a cash commodity per se. So these fees are to be expected, really. It's just unfortunate that if people are using credit cards for them to purchase cryptocurrencies, they might think twice, or they might be a little bit more mindful. My own opinion is that, you really shouldn't be buying credit for you to get into cryptocurrencies, because you don't know how the volatility may sway. You might be lucky, you might be able to buy $100 worth of Bitcoin, and then tomorrow it actually doubles to 200, or it could go the other way. You could buy $100 worth of Bitcoin and then find out the next day it only has a value of $10. So I don't necessarily think you should be taking that risk with credit cards, because credit cards tend to have the highest amount of rate of interest ever. It's more expensive, the rate of interest and the APR is more expensive than getting a loan, and it needs to be paid back into a shorter time frame. But I guess what's happened is that, these institutions have clocked on, and they're saying, if you're going to continue, we want a piece of this. So this is understandable. Let's move on to the next news topic. China to stamp out cryptocurrency trading completely with ban on foreign platforms. Offshore platforms targeted after recent efforts to shut down domestic exchanges failed to eradicate changing. Okay, I'll continue reading. China is to block all websites related to cryptocurrency trading and initial coin offerings, including foreign platforms, in a bid to finally squash the market completely. To prevent financial risk, China will step up measures to remove any onshore or offshore platforms related to virtual currency trading, or ICOs, said an article published on Sunday night by Financial News, a publication affiliated to the People's Bank of China. The article acknowledged the recent attempts to stamp out digital currencies by shutting down domestic agencies had failed to completely eradicate trading. ICOs and virtual currency trading did not completely withdraw from China following the official ban. After the closure of domestic virtual currency exchanges, many people turned to overseas platforms to continue participating in virtual currency. Overseas transactions and regulatory evasion have resumed. Risks are all there, fueled by illegal issuances and even fraud and pyramid selling, the article said. So what it looks like China are doing is, following their ban over the summer, they really want to completely sort out trading and cryptocurrency investing. I think it's a shame for China. I always suspected that, people in China would find a way around the ban that was imposed in mid 2017. Reading this article, it appears like it. However, it looks like the Chinese agencies want to make one more sort of stance to complete trading with foreign external entities outside their countries. I think one way that they're going to do this is by imposing, the Great Firewall of China, which will still make it hard for people to go to foreign exchanges or for them to participate in ICOs. I guess China is really trying to protect its currency at heart. It wants to restrict the flow of capital coming out of its borders, going into sort of other areas. And as well, I think that there are certain elements that they're trying to protect their own community from fraud. Unfortunately, in the ICO landscape and in this cryptocurrency, landscape that we're in, we do have rogue, dangerous agents who are out to scam people. And if people are being scammed, then people are losing money. And I think that maybe the Chinese government are trying to look to protect its citizens as well as mainly protecting its own currency. My personal opinion is that I don't think this will cause an end to Chinese people investing into cryptocurrencies, even though with the Great Wall of China, even though with the Great Firewall of China, you still do get people using VPNs. In China, they've blocked services like Facebook, like YouTube, maybe even Twitter. But from what I do hear is that people in China, they still use these services. Although, yes, it will restrict a large volume, a large amount of people. I think that you really can't stop progress. You can't stop ingenuity. You can't stop technological advancements. So this is going to be really interesting because, when I do think of China, I do look at them as being innovative. I do look at them as being industrial. I do look at them as being entrepreneurs. And cryptocurrency seems to be one of the best sort of vehicles for you to be able to get high returns on your investment. So whilst this may affect the majority of the population, I think there will be a lot of people in China still finding ways to invest into cryptocurrency. It's just that with the ban that they're going to have, it's going to be harder for people to sort of circumvent it. And obviously, things will sort of go underground. You won't be able to promote particular services, so everything will just be kept underground. But this is a very interesting article, and we can see that, with this news coming out today, people who have weak hands are feeling the effects of so-called regulation coming down, and they're like, oh, this is not good. Okay, I need to get out. So let's move on to the next article. Okay, this is by the Express, express.co.uk, and we're talking about JP Morgan. Okay, so Bitcoin price warning. JP Morgan strategist shuns cryptocurrency until its legal tender. As Bitcoin price continues to plunge overnight, John Normand of JP Morgan warned the cryptocurrency will never be a threat to traditional currencies unless it becomes legal tender. Interesting. Let me read on. Bitcoin saw a dramatic crash in price last week as the value plummeted to an overnight low of around 8,000 on Monday after Lloyds Bank announced a ban on buying NTC, I think this should be BCT, with credit cards. With cryptocurrency's recent crash, more skepticism around the so-called digital gold grew among financial experts. JP Morgan told Bloomberg he dislikes Bitcoin and does not believe the cryptocurrency will replace or challenge traditional currencies. He said, I don't like Bitcoin relative to government-issued currencies. I understand its novel value and understand its usefulness in a circumstance, but as long as it will never be legal tender, I fail to see how it's ever going to challenge a challenge to government-issued currencies. This is interesting. Let me read the whole article. Nigel Green, CEO of DeVere Group, claimed Bitcoin could gain by 50 or 60%, but will remain highly volatile as it comes under increasing pressure from Ethereum and other cryptocurrencies. He said Bitcoin, the world's highest profile and largest by market capital current cryptocurrency, slumped by 30% last week. There's increasing scrutiny of the market by governments around the world, plus enhanced regulation. However, demand for cryptocurrency is set to skyrocket in 2018 as more people get to know about them and use them, and as the interest of governments and businesses and more regulation demonstrate the market is maturing and becoming ever more mainstream. Oliver Isaac, a cryptocurrency investor and influencer, believes the technology behind Bitcoin could be the currency saving grace. And he believes that while there may be a current dip in value, the currency will recover over time. He told Express.co.uk, the cryptocurrency markets are extremely volatile, and as an investor, you often have to look beyond the initial panic of a large price drop, not let emotions get in the way, and look at the long-term likelihood of a positive return. Bitcoin, Bitcoin Cash, Ethereum, and Ripple, and some of the most well-known and talked about cryptocurrencies with largest market caps. While their short-term value fluctuates depending on market news, the underlying technology, blockchain, will survive and prosper, and I'm very confident in the tech. I am a strong advocate of Ethereum and Bitcoin Cash and believe the price will recover over time. Okay, all right. So we sort of heard from three people in this article. This chap here who works for JP Morgan, what's his name? John Normand, said he doesn't like Bitcoin relative to government issued currency. Obviously, he's a banker. As you can see, he's been invited onto this Bloomberg show as an expert. He's the only one talking. Looks like they're based in London. He's a banker, so he obviously doesn't want to suffer from disintermediation. He wants to continue making money from foreign exchange, from allowing people to buy stocks, from issuing mortgages, from people going to them as a loan. Banks are really third parties when it comes to the issuance of money. Cryptocurrency threatens that. So of course, any senior banker in their right mind who probably makes millions of pounds or dollars a year from bonuses paid to them from profits that they've made by the issuance of money, they're not going to like Bitcoin. Of course, that goes without saying. So one of the things that he's failing to sort of think about is to contemplate that we are in a global market, and in global markets, we are not sort of cocooned or positioned or sort of peg-holed into various areas like we used to in the past, especially before the free flow of information which came to us via internet. I guess what I'm trying to say is that he's right that I understand its novel nature and understand its usefulness in a few circumstances, but as long as it will never be legal tender, I fail to see how it's ever going to challenge to government issued currency. So yes, currently, right now in the UK, Bitcoin or cryptocurrencies are not legal tender. However, in Japan, Bitcoin is legal tender. So he's only showing us a half truth, because in certain countries in Asia, if Bitcoin is a form of legal tender, the way that I see it is this is not a complete truth. Yes, if you just believe everything that the papers say to you and your viewpoint is very specific, it's just tied to the UK and you don't really look and understand macro and global affairs, then you can be bamboozled by somebody like this John Norman. However, if you have more of a macrocosmic view and tend to look at the world more and what's going on in different countries in terms of Bitcoin and in terms of cryptocurrency, then you're able to quickly assess that, hold on, this statement is not completely true. Bitcoin is legal tender in countries like in Japan. So therefore, what does that mean? It means that some countries are faster to embrace technology, and some countries might not have heavy claws from banks like JP Morgan does have in America or in the West, and even here in the UK. And maybe their claws are not completely clawed down into countries like Japan. That last statement there, I'm just, thinking outside of the box. I don't know if JP Morgan do have a strong presence in Japan. They probably do, but really JP Morgan are firstly an American bank, and because of the English that we speak, I'm sure that they have a big presence here, especially in Canary Wharf. And then, this Nigel Green, he gives his opinion. He rightly, states that the demand for cryptocurrencies in 2018 will increase, will skyrocket as more people get to know about them and use them, and interests will increase by governments and businesses. And I would tend to agree with him. Although right now the market is low, there are many people that know about cryptocurrency. A lot of them don't invest. A lot of them don't have skin in the game, but there are more people who are aware of cryptocurrencies. And what I'm finding is that things are changing with new people. When I first got into cryptocurrency, I bought Bitcoin because I thought, oh yeah, this Bitcoin, let me experience it. Let me get a Qt wallet. Let me download the blockchain. Oh, I've got some Bitcoin. Let me send it to myself. That's how I experience cryptocurrency. But what I'm finding now with a lot of new people coming into the game that attended my meetups, or I meet at various other meetups, they don't buy Bitcoin. They just go straight into another cryptocurrency. So two of the last people I spoke to, one invested into Verge, and the other one invested straight into Electronium. So this is how new people are coming into cryptocurrency, as opposed to getting into Bitcoin. They're just going into some of the other ICOs, or excuse me, some of the new coins which they see fit. And then we then have this section from Oliver Isaacs, the investor. And then I would agree with everything he says, basically, that whilst their short-term value of the other cryptocurrencies fluctuates depending on the market, the underlying technology, the blockchain, will survive and it will prosper. And I'm very confident in the tech. I am a strong advocate of Ethereum and Bitcoin Cash and believe prices will recover over time. I agree with everything he says, apart from I'm not a strong advocate of Bitcoin Cash. Bitcoin Cash does have its uses, but I'm a core type of guy. I'm a Bitcoin type of guy. But yes, I agree with the statement that he said that the underlying technology has not changed. What we're seeing in the decrease in price is due to human psychology. And I covered this in my last video, family. So, you have the psychology of winners and you have the psychology of losers. And if governments are putting or appearing to put pressure onto cryptocurrency, aka the Chinese government with their ban, aka America with their tightened regulation, some people, they see this as, oh, this crypto is not what it used to be. This is another reason. Our cryptocurrency's been declining for well over 2 months. It's now looking like a third month. I need to sell. These people, they don't have a long-term vision, and therefore they're selling, which is understandable. But really, that's not the way for you to win. I think for you to win, you need to have a firm psychology. You need to be confident in your abilities. You need to be confident in the research that you've done, how you've assessed the technology, and then you should have a long-term play on it, at least a year, maybe even 3 years minimum, which sounds a lot in cryptocurrency, but I think compared to other asset classes, it's really not that long. So what's next in the news? Texas takes the lead on states, cryptocurrency crackdowns. On Friday, Texas Securities Board issued its fourth cryptocurrency cease and desist order in just over a month on a cryptocurrency company. The order follows a roughly one-time undercover investigation of cryptocurrency investment programs, said Joseph Rotunda, director of the enforcement division at Texas State Securities Board. Other states have not yet taken a dramatic step against cryptocurrency. DeVere Coin. Texas is becoming one of the most active regulators of cryptocurrency. On Friday, the State Securities Board issued its fourth emergency cease and desist order in just over a month on a cryptocurrency company. DeVere Coin is violating sections of the Texas Securities Act by offering unregistered securities for sale and misleading the public. Security Commissioner Tavish J. allies, and in the February order, the Texas State Securities Board previously issued emergency cease and desist orders on 24th January against a Hong Kong-based company selling a H2B Coin, promises investors that the digital currency will soon be one of the world's most valuable. 4th of January against BitConnect, which is soliciting investors for cryptocurrency-based program that the company claims will deliver annualized returns of 100% or more. 20th of December against USI Tech Limited, an overseas firm that is promising low-risk, triple-digit returns from investment tied to Bitcoin mining. After the order against BitConnect, DeVere Coin tweeted on 16th of January, "This does not change anything for us except that DeVere is the #1 lending program in the world." Okay, all right. So it looks like Texas are going ham. I was aware that Texas provided a cease and desist to USI Tech Limited. I was also aware that they went after BitConnect and they sent them a cease and desist. I did not know, however, that they also sent a cease and desist to H2B Coin, which is a Hong Kong-based similar type of lending platform. And then now it looks like as of Friday, DeVere Coin was also in their scopes. I checked the price of DeVere Coin yesterday, and the price of their coin went from $120 about 3 or 4 weeks ago, about 3 weeks ago, and right now, when I last checked, their coin was under 77 cents. It's very strange and questionable why Texas are going hard after these cryptocurrencies. I think, with my thoughts on the matter are that with BitConnect, looking back now, the marketing of BitConnect was very aggressive. And because it was aggressive, they had the referral structure, the way that some people promoted the platform. They were all on YouTube, they were all on Facebook, they were all on Twitter. Yeah, one guy, Trevon James, was even on the CoinMarketCap website, and he took out a banner on this right-hand side. And, my opinion, looking back now in hindsight, was that it was aggressive. However, I'm surprised that USI Tech was targeted, because my opinion is that USI Tech are slightly more transparent than BitConnect. With USI Tech, you can see who the owners are. They have mining history. They have been in Bitcoin mining for a few years. They have transparent owners. And I think that's a real shame, because what USI Tech were offering was a form of cloud mining. You buy these certain packs, the Bitcoin are mined, and then you get paid. So does that mean that they're going to go after all forms of cloud miners as well? And then with this Hong Kong-based, H2B Coin, I really wasn't too aware of their platform, but after doing just some basic research, it looked like they offered a similar lending program to your Davo coin and your BitConnect coin. So I can see why they're in the scope of Texas. But I'm thinking, this is a shame, because if Texas are providing cease and desists, if these companies, if they are providing their lenders and people in their community with returns, and then for whatever reason now with these cease and desists, they're unable to continue their business operations, then, I think the regulators in this circumstance, Texas, they are also responsible for these platforms closing, and for these platforms, losing their people's money. With that said, if the platform was sustainable, and if they have genuine trading operations, genuine trading bots, and you don't need to sustain yourself with new money and new recruits coming on board, then that's fine. They should continue business as usual. But if they are dependent on new subscribers, new people coming in, then obviously that is a Ponzi scheme, and it does need to be closed down. I think with the BitConnect way that they ended, I think the denial of service attacks was the cherry on top of the cake, really, and that's why they had to close. It doesn't seem that any of these websites, these services, experienced the same thing. However, I did hear that Coin did suffer from denial, from DDoS attacks a few days ago, on top of the ones that they faced at the beginning of the year. So with these lending platforms, it's looking like the writing is on the wall. It looks like, things have to change, because when BitConnect fell, when BitConnect stopped their lending program, on their website, Coin wrote, "This does not change anything for us, except that now Coin is the #1 lending program in the world." I thought that was a very stupid thing to say by Coin, because now you're trying to pick up the title, you're trying to claim that you're #1, and if you're #1, you're going to have a target on your back. And now it's almost like 1 month today. Actually, it's 1 month and 2 days since BitConnect got their first cease and desist, and now Coin have been served with exactly the same thing. So I think that the scope of lending chains has to change. Basically, lending platforms, if they're going to continue in the current form that they're on, they are going to have to move in silence. They're going to have to be more sort of quietly done. You can't really be bragging to the world about your status or what you're doing. Who knows? Some lending platforms might completely go underground. This is what I expect. I'm in a few lending ICOs myself, and I'm into Finecoin. And with Finecoin, what I found is just that they're not even going to be doing a lending program. What they're offering is now a staking program. So they're really trying to fall within UK, not US. They're really trying to work to fall within US legislation. While I don't have an opinion on that at the moment, it is good that, some of the new lending programs which are coming out are taking into consideration what's happened with their counterparts and are looking to adapt their strategies so that they can be around for much longer, so that their programs can be sustainable. Okay, so yes, I think if anyone's in lending programs, I think we have to monitor it more closely, and we need to, you know, really calculate what we're going into, because with these clampdowns, with these cease and desists, it looks like Texas does not want people in the US to make any money from lending programs or to be scammed. That as well, that is a possibility, but nobody had actually been scammed only until their coins were given back to them at a really low fee. However, these programs have been paying out, and it's not necessarily a scam. And I'm just wondering, why don't why don't they go after ICOs as well, especially the scammy ICOs? But I guess some of these lending programs, they're a little bit easier to track down and target. Okay. But yes, reading things like this, hearing, Texas takes the lead on states' cryptocurrency crackdowns, this is all adding to some of the fear, uncertainty, doubt, of the cryptocurrency market. And in my opinion, this contributes to the low Bitcoin price that we're seeing right now. Okay, now this is an article by Forbes, which is good because I had discussions with some people who were in my group, and they mentioned that India is banning cryptocurrencies as well. I think this article clears it up. India is not banning cryptocurrency. Here is what it's doing instead. It has been a tumultuous week for cryptocurrencies across the globe. Whilst China has blocked cryptocurrency exchanges, US banks are steadily declining cryptocurrency purchases. Meanwhile, India Finance Minister, during the national finance budget, stated that the country does not recognize Bitcoin as legal tender, and steps would be taken to penalize cryptocurrency payments, sending cryptocurrency enthusiasts and investors in a tizzy. Shortly after the minister's statement, the price of Bitcoin fell to a 2-month low of less than 7,000. The comments managed to invoke doubts in India's crypto community about the legitimacy of trading, except this time authorities have decided to steer the debate clear of controversy for good. Shortly after the budget announcement, Secretary of Economics said that the government will set up a panel to examine trading of cryptocurrency assets in unregulated exchanges. The panel is expected to submit its finding in a report by the end of March. Head of Blockchain and Cryptocurrency Committee of Internet and Mobile Association of India is one amongst many people in India working towards spreading awareness of cryptocurrency in India. Following the finance minister's comments, they revealed that he was happy that cryptocurrency at least found a mention in the country's national budget. I recognize that it was a step in the right direction, having the finance minister say that cryptocurrency isn't legal tender is perfectly logical. Every nation, barring Japan, has taken this stance. It doesn't mean cryptocurrency is illegal, but comes with its own risks like any other investment assets in the market. So basically, just to summarize, India have announced that Bitcoin is not legal tender, but they have not outlawed it, or they have not found it illegal. Basically, what they're going to do is they're going to treat this like a commodity, which means that you should be able to exchange it, which means that you should be able to buy it and trade it. People can use it but it's not illegal. So I think, this is very positive news in some ways. It depends how you look on it. If people were expecting for it to be legal tender, then if they're disappointed, we can understand why there is a drop in price. However, it hasn't necessarily been outlawed. So I think for those who have a long-term perspective of Bitcoin, of cryptocurrencies, this is still good, because one of the things with Bitcoin is, like, we all talk about Bitcoin and we all look at it as a form of payments. That's not necessarily the end all and be all of cryptocurrency. I guess what I'm trying to say is that it's really the code and the blockchain and the introduction of decentralization which is going to change the world, including the UK, including Japan, and including India. This means that there will be disintermediation. This means that there will be more peer-to-peer services. This means that we will be able to get rid of middlemen who take healthy chunks and who take healthy profits. So as long as people are developing blockchains and cryptocurrencies to disintermediate, this is going to create and forge a better world currently than the world that we do have, where if you want to send money to India, you need to pay hefty remittance fees to companies like Western Union. With the advent of blockchain technology, hopefully that will become a thing of the past. Okay, so as long as the developers can keep programming, I think the statement by the Indian minister is a very good one. Okay, what to expect when CFTC, Securities and Exchange Commission chiefs talk crypto with Congress? Okay, so this is an article by CoinDesk. This was published yesterday, and it looks like basically Congress are going to meet today. So let me read. Congress is set to hold what may be the most consequential hearing in years on the subject of cryptocurrency, with the heads of two main US financial market regulators in the hot seat. The chairman of Commodity Futures Trading Commission and his counterpart at the Securities and Exchange Commission will testify on Capitol Hill tomorrow, and the process of fielding questions from the State Banking Committee is likely to yield one or two notable moments given recent developments in this place, including those involved in the agencies in themselves. So basically, what's happening tomorrow is that on Capitol Hill, today, what's happening is that these heavyweights from the Commodities Futures Trading Commissions and also the Securities Exchanges Commission, they're going to be talking about things like lending programs, I guess, what's happened with BitConnect. They're also going to be talking about ICOs, basically, and what they are going to suggest is more regulation and how things should be regulated. And I think this is a good thing because, I think when we're looking at countries like in the UK, in Europe, in America, we're seeing a lot of businesses come in and regulate the country. We're seeing a lot of businesses come in. We're seeing a lot of businesses create businesses in these countries. We're seeing a lot of blockchain development. If you go to Silicon Valley, there's probably quite a few companies who are in the blockchain and cryptocurrency space. So the way that I see it is, if you were to outlaw these companies, they're going to move. They're probably looking to move to places like Singapore or Japan, where there's a bigger community of blockchain developers, or maybe they might even go to Dubai. They will basically go to countries where they are welcomed, where they're not breaking any laws. Now, I think in terms of America, whilst they are, finding that cryptocurrencies are offering types of securities, it's rightly so that they want to ban these and make sure that they want to fall in line. But I think that they're aware that these blockchain companies who are genuine, who are big, who are creating good services, as long as they provide genuine services, we want them to remain here in the States. So I think it's very sensible that these countries in the US, that these entities are meeting to discuss it and propose legislation. Hopefully it's not legislation that starves the market or, forces them to whittle out anywhere. So I think this is positive news, Now, next news. Ex-PayPal president Facebook Messenger unlikely to support crypto. Facebook Messenger is unlikely to embrace cryptocurrency payments anytime soon, according to David Marcus, Facebook Vice President of Messaging. In a recent interview with CNBC, the former president of PayPal pointed to a perceived issues with existing cryptocurrency, specifying high transaction fees and low transaction times as reasons why the product isn't likely to produce the technology as a payment method, at least in the near term. However, Marcus joined the board of Coinbase late in 2017, did leave the door open to allow such payments in the future, saying when blockchain developer communities fix all the issues, it's possible that the company will do something to open up this option. Okay, this article I think is funny, so I'm going to interpret this with my own perspective. Basically, this chap, Marcus, was the former president of PayPal, and then now he's over at Facebook Messenger, and he served on the board of Coinbase. So I'm guessing, he has a good understanding of cryptocurrency. However, I find it strange that he said one of the reasons it's not going to be on Facebook Messenger is because of high transaction fees and slow transaction times. He could have picked a coin like Litecoin, and Litecoin would, have passed the test. The fees for sending Litecoin are quite low, and the transaction times on Litecoin are quite quick. Or he could have went with Monero. Fair enough. We understand that these are problems sometimes, for Bitcoin. Not even all of the time. Sometimes for Bitcoin. I just really think he's just sort of lightly spreading, FUD. Because how I see it is that Facebook Messenger now should be introducing cryptocurrency payments, as I think there's an app called Wadu. Forgive me if I've got the pronunciation wrong, but in China, they have an app which is able to send cryptocurrency, and that something was introduced recently, or was going to be introduced. So Facebook was playing a form of catch up. Now, with this news, it sounds like Facebook are making excuses for why they're not implementing cryptocurrency. And furthermore, I think they're just developing their own cryptocurrency quietly in the backgrounds, and they want that to embraced. So that's why they've, spoken about Bitcoin's disadvantages, but they've completely dismissed any other cryptocurrencies. And, Mark Zuckerberg made a public speech about wanting to do more with cryptocurrencies. So in my opinion, they're just talking shit. Excuse my language. They're talking shit. They're looking to create their own cryptocurrency, and they don't really want others to be on their platform until they've created their own. So this is where I believe, it's going to go. Let's move on. Okay, Bitcoin price boost. Experts say crypto is not going away, and says price is nothing. Bitcoin is not going away, an expert has claimed, despite the cryptocurrency undergoing a bearish start to the new year and its price falling to below $8,000. Okay, Chief Investment Officer at Arcadia Group Crypto Ventures has claimed the cryptocurrency will always be volatile, but that said Bitcoin was the future. He said, this is nothing, you see. It has just fallen 20% this week. Maybe in 2 months it has fallen 50%. I used to remember times when this was $1, then it goes to $10, and then it goes back to $3. Compared to that, this is nothing. For all of those newbies out there, oh my God, they're going to get crushed. But this is not classical music or jazz. This is punk rock, and they have to get ready for that. If you are expecting classical music, this is very calm, well, you're in for a surprise. According to Al Jazeera, Mr. Epen said, what percentage of people are in crypto? And this is a changing world. It's like 1984 and the internet. By 1988, most of the analysts out there were saying by 2002, there is not going to be any internet there, and this hype is going to go away. In fact, I mostly agree with his sentiments, actually. The underlying technology has not changed. I agree. This is like the beginning of the internet again. This is like the wild, wild west. We're having lots of speculation. We're having lots of money going to projects where it doesn't deserve. But I think the investors are sort of ahead of the technology in many instances, in the sense that, things like EOS, they're not even launch ready yet. However, EOS has a huge market capital of, let's check. Yeah, EOS has a huge capital of right now 4 billion, which is quite big for a project that hasn't finished. And Neo is closely by. They are still in their ICO phase, and they're ranked number 8, and they're valued at 5 billion, with a 24% loss in one day. So yes, I agree that it's like 1994 again, and most of the technology isn't ready yet. However, I agree that in 3 or 4 years, all of these blockchains are not going to disappear. Maybe many of them might, a large proportion of them, but many of them will be ready, and many of them will be offering services, and many of them will have their platforms, and many of them will be in discussions with big businesses and maybe even government agencies. So I definitely agree with that sense. Okay. So we've got a few articles, but I don't think I'm going to cover all of them today. Let's just look at one more. It doesn't die, it comes back stronger. Bitcoin believers are digging in amid the crypto bloodbath. Okay, Bitcoin fell below 7,000 on Monday for the first time, while small investors shared tales of its woe on Reddit and Twitter. Institutional players took more on a long-term view. One VC said he still expects Bitcoin to hit 50,000 in 2018. With Bitcoin trading below $7,000 on Monday, 64% below its all-time high, many investors have been left wondering whether this is true cryptocurrency carnage or if Bitcoin has the ability to bounce back. Some have taken to Twitter and Reddit to exchange stories of lost potential and what it means to see thousands of dollars in investments evaporate in a matter of days. but Bitcoin, which increased 1,800% in value over the course of 2017, is known for its volatility. Despite consumer fears, professionals in the cryptocurrency market have much more long-term views when it comes to Bitcoin's ability to rebound. Holding, or hodling, as it's known by its required patience and resolve. And despite Bitcoin's relatively short-term history, many of these believers are taking comfort in the fact that Bitcoin has never failed to bounce back from a hard dip so far, which is very true. So without me going into the rest of articles, basically, the smart money right now, they will see this dip, they will be buying more. The weak-minded people will be selling. Those retail investors who are scared, who probably took out a loan to get into Bitcoin, will be forced to sell, and then they'll sell at a loss, and then they'll still be in debt. So let me just wrap up this news. The reason that I went over all of these articles is because, I wanted to share what's out there in the market, what's being said about Bitcoin, about cryptocurrency, about the market, and how agencies and how countries are dealing with Bitcoin. I never rely on this and the news as my only sole means of understanding what's going on. I like to read these articles. I like to keep myself informed. I do my own research, but I don't take what's told to me at face value. I read and then I analyze. You could say I use my third eye for me to assess the information that's given to you based on my understandings. Now, some of you, you're going to have different perspectives to me in life, and you would have experienced different things, which may lead you to interpreting news differently from the way that I've interpreted it. And that's all fine. That's good. At the end of the day, the point that I'm trying to reiterate to my audience is never take the news by the face value. Always try to interpretate what you read and what you come by with your own sort of spin, with your own thoughts, because this is what you're going to have to do for you to function. And if you're unable to do that, and you believe that my interpretations of the news has helped you, then yeah, please like, please subscribe, please share, and please indicate that you like these, and then I'll do these more often. So that's really it for this Brother Crypt edition. Yes, the markets are down. Think about your long-term positions, don't sell, hold, and if you can, send some money to the exchange so that you can buy a Bitcoin when it's cheap. Because, what we're seeing we're seeing regulation, we're seeing regulators starting to come into this space. On the 23rd of January, they held the meeting at Davos. And then since that Davos meeting, we've been seeing all of these cease and desists. We've been seeing these visa bans. So collectively, those in power, those in charge of our financial economies, they are now reacting to Bitcoin and cryptocurrencies. They can't necessarily ban it outright or destroy it, but they're doing what they can do to make it harder for people to get into this space. Coupled on top of this, there are now more stricter regulations for people to get into YCOs. Basically, without going into this into too much detail, they want only accredited investors to get into the ICOs, which means like your average Joe, like you and I, unless we're accredited investors, we are going to find it much harder to get into ICOs. So what that means is that the rich are going to get richer, and then the poor are going to get poorer. So what I would suggest to you is, if you're serious about cryptocurrency and you want to make boomers and you want to prosper for it, and you're hoping to turn hundreds into thousands, and maybe turn thousands into 10,000s, and maybe turn 10,000s into hundreds of thousands, you know, you should be doing your research now, because the clock is ticking. You know, they're meeting at Capitol Hill today to discuss regulations, to discuss tokenizations, to discuss ICOs. And then after that meeting, there's going to be some legislations. So, yeah, I believe in 2018, we're going to see more regulation. We're going to see it harder. But there's always a way around. I really believe that this is going to be a buoyant market. I really believe that it's going to enable us to take some of the power back. But you've got to believe it. You know, we can't just be stumbling and being fearful at these articles and with the news that we're getting. You know, that's for losers. That's for people with a psychology of losers. If you're in crypto, if you're in my group, then you should have a psychology of a winner. And that means that whatever gets thrown at us, whatever the legislation, we'll always find a way around. So with that, people, you know, thank you for watching another Brother Crypt video. If you've got any questions, let me know. I'm out. Peace.